So guys, it's day 7 of bjwtrades, and then today I'm going to be guiding you through step by step what market structure is. Day 3, 4, 5, we've talked about candlesticks, we talked about trends and break of structure. However, I'm going to be walking you through like a baby how you're going to understand market structure step by step. Now, basically, we all know break of structure have higher high, higher low, higher high, higher low, which is to say, if you have something like this in an uptrend, you tend to say that you call this when the price tends to break the previous high becomes a break of structure, which is a higher high, right? Once you see a reversal and you take out this other high, become what? Another break of structure. Now, that shows you break of structure, and then knowing where the price is going shows you that is a trend. But today we're going to be talking about market structure. Now, you want to know that market structure is getting the overall direction of the market, right? Now, you don't want to like sell when price is buying, and you don't want to as well buy when price is selling, right? So you knowing this thing is actually market structure, and I'm going to be guiding you through the two market structure, the two type of market structure we have, and at the same time I'm going to break them step by step, understanding what this type of market structure. So basically we have the two type of market structure, which is the basic market structure. I'm going to write it down right here. So these are the actually two type of market structure, and then I'm going to go ahead and explain the basic, and subsequently I'm going to explain that of the algo. Now, the basic market structure already tells you the direction of the market. You knowing like, okay, looking at this chart, looking at your trading view chart, you see that market is as well, giving you either a bullish trend or a bearish trend. Now, knowing this is basic. Now, before you to know this, there are things you need to like put in consideration, which in basic market structure, we have three type of market structure in basic market structure. And this includes that of the swing structure, we have that of the substructure, and we have also the minor structure. Right, so these are the three basic structure you need to know to understand the overall direction of the market, and that way get a valid entering whenever you want to place or execute any particular trade, right? Now, but the major one right here you need to pay close attention is that of the swing structure, right? Now, we all know that price goes higher high in a bullish trend. Price gives us a higher high, higher low, higher high, higher low, right? While in a bearish trend we have the lower high, lower low, lower high, lower low, right? Now, we have the swing structure. Now, what is a swing structure? The swing structure actually helps us to determine the current trend of the market. What does that mean? Now, if we have charts, let's say we have price action doing something like this in a bullish trend. So I'm going to explain why the bullish trend, and we all know what a bullish trend is. If you don't know what a bullish trend is, you just have to go back and watch the previous videos and to learn what a trend is, and then understand the bullish trend, moreover the bearish trend. So basically in a bullish trend we have a higher high, a higher low, and a higher high, right? Cool. So this is basically a bullish trend, right? So whenever you have a higher low and a higher high, a higher low and a higher high gives you a bullish trend. Now, where is your swing structure? Now, the high that takes out this particular high is basically your swing structure. Now, if you have something like this, now this high that takes out this particular high right here tends to be your swing structure, right? Which is to say, from this zone, boom, to this zone is your swing structure, right? Now, this high you're seeing right here that takes out this particular low, this higher low, that break the structure tends to be your swing structure. Now, what is your substructure? Now, the substructure is, you can just say, is a reversal, right? It's basically actually a reversal. Now, the reversal that form the higher low tends to be your substructure. I just hope you guys should understand this thing. Now, let me repeat. Now, we have in a chart, in a bullish chart, now we have a higher low and a higher high, right? Now, where is the swing structure? Now, the high that takes out the higher low, giving it a direction of, let's say, this is the bullish trend. Now, this high that forms this high that takes out this low becomes your swing structure. Now, when you say, okay, Bernard, where is my substructure? Now, the substructure tends to be the reversal that forms the swing structure. So now let's say we've already gotten our swing structure, and now you're looking at the substructure. So basically, we're going to see that whenever price tends to give a reversal, it becomes your substructure. Now, the swing structure is the major structure that you need to look out for to say, okay, this is giving me an uptrend or it's giving me a bearish trend, right? So looking right now, this reversal that comes right now tends to be your substructure. Now, the minor structure is basically the moves we tend to catch and then execute. Now you understand that for the bullish trend, I'm going to go ahead and explain in a bearish trend, and like I said, show you a chart example. But before I do that, if you're actually watching this video, you want to go ahead and like this video, subscribe to the channel, turn on the bell notification, so you're going to be notified whenever I upload videos like this on this channel. And you want to know that this bootcamp is sponsored by Bluffin. And if you don't know Bluffin is a centralized exchange that does spot trading, futures trading, copy trading, and these guys gives you incentive for you trading with their platform. And whenever you tend to trade with their platform and maybe you make profit, you get paid for trading on their platform. And with that said, if you tend to use the link which is going to be in the description section, as a new user, you get a reward whenever you sign up, verify your account, and make a deposit. You get a reward because you tend to use the link. So, and if you don't know how to trade with them, I've made a dedicated video on my channel how to do futures trading with them, how to do copy trading. So all you have to do is to go ahead and so check my channel to watch those videos and get full insight how to make money off bluffing. So with that said, coming back right here, like I said, you guys, I'm going to show you guys in a sell position how you can identify what market structure is in a sell position. Like I said previously, a sell position is when we have a lower high and lower low, a lower high, lower low. Now, where is our swing structure? Now, basically, a swing structure is the low that will take out the lower high. Is that easy? All right. So all you want to mark out now, you want to say this high right here is my swing structure. This low that form the trend is my swing structure. Like it's the major structure that, okay, I'm seeing the reason why this is giving me a sell trend or giving me a bearish trend is because of the low that forms that particular structure. Easy. We also have the trend going up this way. Now, whenever the trend gives this reversal, giving this lower high, it becomes your substructure. Now, which is to say, if this reversal is being formed, then the next thing we're expecting is the next lower low forming what? Another what? Swing structure, just like that. Now, when can I say this is a minor structure? Now, whenever you want to say, okay, this is a minor structure, is basically those moves we catch and we look out for the first break of structure. And don't worry, guys, I'm going to be talking about liquidity. We're going to be doing POIs. You're going to understand what it means to look for a validated structure whereby you know when to buy. Now, you can't say, okay, because I know market is being, bearish, where can I take a trade off? You can't just come to the chart or you come right here, you say, put your entry in this way, and then you just put your stop loss right here. Trust me, you're going to lose the trade, right? 80% of the time. Actually, basically do trade like this before, but when I actually tend to understand structure, the whole game changed for me. Trust me. So all you have to do is just for you to pay close attention and then follow me step by step and let me guide you through how to understand structure. And trust me, if you understand structure, you could be actually be doing really cool in your trading journey. Right? So that being said, now you've understand that looking right here now, basically, this is the first structure I drew, right? Which is bullish, as you can see. Now, let's say price tend to do something like this. If you give us this reversal and then go up again, we're expecting what? Another what? Break of structure, which is to say it's still being bullish. Instead of price to tend to maybe give the reversal as usual, come back to this zone and then go up. Now, what if price tend to take out this low right here? Now, we're going to say that if price tend to take out this particular low, now this gonna be a lower high, which is the high you're expected to be protected. This is gonna be a lower high. So what you're gonna be expecting once price as well take out this high, right? This becomes a lower high. Once price take out this low, instead of forming a reversal to continue the trend and then take out this particular low, this turns to a lower high. I'm gonna mark it out as you can see. Boom. Now, what are we going to be expecting? Now, we're going to be expecting a bearish structure. And what is a bearish structure? Now, we've seen a lower low, so we're going to be expecting a lower high that will continue the lower low to give us that sell structure. So we're going to be expecting price to do something like this, then boom. That way, you now see that this high is going to be protected, going to be your lower high that you're going to protect, right? So you can just say this is going to be your protected high, and then the next one going to be your substructure, right? Now, the next thing you want to look out for right now is a minor structure. You're going to look out for the minor structure which you're going to catch. Now, whenever you look out for minor structure, you tend to wait for it to come to this particular zone. Then once it comes to this particular zone, then we sell off this place and then keep the trend, keep going. Easy peasy. So I'm going to show you guys chart example, and then that's going to be it for this section. And then subsequent video, maybe day 8, I'm going to talk about Argo, and that's going to be so in depth because I'm going to be showing you guys how to validate a market structure to get a trade from. Now you've understand that, I'm going to look for this example. I have a trade right here. I'm actually anticipating on gold. As you can see now, this is a clear structure on gold. Now, I told you guys that a clear structure must have a V shape and an A shape. Now, a V shape in the sense that whenever the price is being bullish, you look out for a V shape. But whenever the price is bearish, you look out for an A shape. Now, looking right here, this is a setup I've got on gold, right? Now, as you can see, if you watch, basically, there was a higher low, right, which you're seeing right here, and what? A higher high, another higher low, and what? Another higher high. Now, basically, from what I've just explained, you can know that I said whenever the price tends to form the higher low, the next thing you're expecting to do is to look out for a swing. What direction is the market going? Now, the direction the market is going tends to be your swing. Now, whenever you're saying that, the next thing you want to look at for now is the substructure. Now, the substructure tends to be your reversal. Now, where is the reversal right here? Let me delete this thing. Your lower high, sorry, your higher low, and then seeing your swing structure, you tend to see another reversal. And then next one is your substructure. Now, the substructure is this, right? And then the next thing we want to see is what? Another what? Break of structure. Now, we are basically seeing that this market is giving us a bullish trend in a 1 hour time frame. This is a 1 hour time frame I'm using to explain this to you. So what are we expecting? Now, you can clearly see that what I'm literally expecting is I'm expecting price to literally come to this zone, right? To come to this particular zone and then do what? Continue the trend. Easy peasy. And if you watch, basically, you can see my market order or my limit order is being set right here. And what this BTC doing is then forming the substructure coming down to this particular zone. Is now reversing back to this zone which I put my limit order. So whenever I tap into this zone, then I buy up from. Right, I take the trade. Now you're going to ask BJW, where exactly can I take trade from? Because you don't want to take trade off blindly, or you don't want to just assume because market is giving you higher highs or higher lows, higher highs, then you just want to jump into the market and take trade. No, that is where Fibonacci retracement tool going to come in. Guys, I know I've not made a video on how to set your Fibonacci retracement tool, but I feel after day 7, I'm going to make another video guiding you through step by step. Now, that is where Fibonacci retracement tool comes in. And what do you use Fibonacci retracement tool to do? Now, use it to look for exact entry, right? That the exact entry tends to be the discount zone and the premium zone, right? Now, I'm going to get my Fibonacci tool. Now, first thing first, whenever you get your Fibonacci tool, the next you want to do is to then place it from the higher low, which is the protected low you tend to create from this zone, for instance. Then you put it to the higher high first, right? I'm going to make it right here where this black is. I'm going to bring this right here. Now, you want to know that with the Fibonacci tool, it tends to as well give you the exact place to as well take your trade, or the exact order to place your trade. Sorry guys, I think I made a mistake on my Fibonacci tool, so I'm going to correct that right now. So you tend to put it from this zone to the higher high. All right, it's cool now. Like I said, the Fibonacci tool have 3 zones. We have the discount zone. Let me get a discount zone. You can call it D. You call this a premium zone, P, right? While this, the golden candle tends to be your equilibrium. Now, whenever price tends to be at the premium zone, you tend to look for sell. But whenever price tends to be at the discount zone, you tend to look for buy. But whenever price is at the equilibrium zone, all you have to do is to leave the market. It's more or less like, whenever the price is ranging, so you tend to do nothing and wait for it to come to the discount zone. So now you figure out where your discount zone is. Then the next thing you want to do is to then niche down from your first break of structure, which is this, to the higher low, and which is coming right here. So I'm going to take my Fibonacci tool, and then I'm going to bring it to this low. Boom. So from your first break of structure, you bring your Fibonacci tool there and highlight it. Now you can now see that our premium zone has now changed. Now before, the premium zone was at the top, and now because we've gotten from our first break of structure to the last higher low, we are protecting. Now you can see right here is our premium zone. Whatever price tend to do at this particular zone, you don't do anything. You have to wait for it to come to your discount zone, then you take a trade. I'm going to end this video right now, and I'm going to see you guys in day 8, whereby I'm going to be talking about how to set your Fibonacci tool, how to use the Fibonacci tool very well, explaining premium zone, discount zone. Then we'll talk about the algo market structure, which is going to be where you can also take a trade off. So guys, I'm going to see you guys in day 8. Stay safe and peace out.